Well, it's time to do business. 55 minutes of business is what we do right here on Business Incorporated this day before Christmas. Christmas Eve, but we'll still do business. Welcome to the program. Here's what we have prepared for you. In Kenya, there's a ban on wheat imports to allow local farmers thrive. South Africa is celebrating 272 days of constant power supply. And in Zimbabwe, the rail sector looks resilient, but there's less optimism. Good afternoon, everyone. I'm Ini John Mekwa. Now let's do business. Starting from the global space, oil prices were up on Tuesday in thin trade ahead of Christmas Day holiday, with prices supported by United States economic data and rising oil demand in India, which is the world's third largest oil importer. Looking at the number right now, we see more than 0.5% for Brent in the green, 0.55% to be precise, $73.02 a barrel. WTI also in the same zone, 0.52%, still retaining that $69 level, $69.60. So the holiday is almost here, but new orders for key U.S. manufactured capital goods surged in November. That's economic data coming from there amid strong demand for machinery, while new home sales also rebounded in a sign that the United States economy is on a solid footing towards the end of the year. You know that the U.S. is the world's top oil consumer. In the shorter term, however, traders are looking for indications of United States demand from the crude oil and fuel stockpiles, which is due from the American Petroleum Institute later on today. Meanwhile, crude oil imports by India, the world's third largest oil importer, went up 2.6% year on year to 19.07 million metric tons in November, according to government data. So this indicates that demand may be rising for economic and travel activities in that country. And from there to the metal space, gold prices edged high on Tuesday as investors brace for a less aggressive path on interest rate cuts from the Federal Reserve next year in a holiday truncated trading week for everybody this week. Look at the numbers at this time. Spot gold 0.1% in the green, $2,616.13. US gold unchanged, still around 2,600. Spot silver 1% up, 0.1% up, $29.68. Platinum was down 0.1%, $938 per ounce, while palladium was on the flip side, 0.5% in the green, $934.51 per ounce. And so we see everyone preparing for the holiday, but investors, of course, are still looking out for those numbers for direction on their decisions. They're focused on how rapidly or deeply the U.S. Central Bank would cut rates in 2025, and the Fed continues reductions in December after a period of aggressive rate hikes. That's no longer news, while U.S. inflation reading on Friday eased some concerns, also adding to the direction of investors' decision. Now we come to Nigeria and head to the southeast of the country, where we see Enugu geographic information. That is one new innovation from the Enugu State government. And they say this is to ease the mind of investors when it comes to land location as well as documentation. The governor there has promised that this is going to attract and sustain investment into the state.
The government of His Excellency Dr. Peter Mbah, the governor of Enugu State, has put in place this tool as an effective and efficient tool through which all the entire land resource of the state can easily be captured online. Now, it goes beyond just having that resource there. It's also a very interactive tool that would enable would be investors, that would enable land users, land owners intending buyers or intending subscribers to land to get on the platform, to interact, to do their searches, to do the regularization of titles, and even to apply for fresh allocations of land, at a click of button, at the comfort of the bedroom, at the comfort of your office. So it actually optimizes the process. It minimizes a lot of the human interferences and makes sure that it's what you ask for is what you get.
Now, the news is not yet over, and Nigerians are trying to, adjust to it. This time, it's not an upward movement, but a reduction in the price of PMS. So we've seen Ipman has confirmed, Petrol has confirmed, MRS working with Dangote also is another one. Does this mean that prices will reduce this Christmas? Tomorrow is just Christmas. Well, let's find out some of the impacts and drivers, perhaps the consequences of this reduction in a PMS price in a lot of states in Nigeria. As at yesterday, however, we spoke to a resident in Port Harcourt, Rivers State, and he did say, well, the reduction hasn't gotten there. We hope it's gotten there today. But let's speak to the managing director of ASCOM. He's a strategic communications consultant, Mr. Ayodele Adio, joins us virtually. Mr. Adio, good afternoon, and thank you for your time.
Good afternoon. Thank you for having me.
Great. So for once, Nigerians have good news, and what better time than the festivities when people will be at home and they can actually visit friends and family members?
I mean, it's an incredibly cheering news, and thanks to Dangote, who's led the initiative to cut off prices of petrol across the country and enter into strategic partnerships with marketers like MRS to sort of bring down the prices of PMS across the country. I think that you couldn't have asked for a better gift to Nigerians who usually travel to their homes, to their villages, to go and see their loved ones and their families. You couldn't have asked for a better gift than cheaper transportation prices, largely occasioned by the reduction of petrol prices at the pumps. So I think that it's a welcome development. I'm excited as you are, and just as many other Nigerians are, because many had predicted earlier in the year that the prices of PMS at the pump was likely to push upwards of 1,500 naira per litre. And to see that there's been a significant downturn to 935 if you're buying from MRS, I think it's a welcome development. Of course, a bit like Oliver Twist, we'll obviously want a lot more reduction, but I think that we can count our gains.
Yeah, well, I guess it's just so true that competition is really good. It's always better for the consumers. But I mean, Dangote has attributed this to the Naira swap, the crude for Naira swap. And, we did see a statement where they were appreciating the President Bola Tinubu for this and all of that. But we also know that the first reduction, they had said it was a Christmas bonanza. So should we be holding our breath? Perhaps, is this a short term? Do we see factors that could lead to, a return to former prices?
Well, I mean, you see, what we should actually call for then is policy consistency. That will be the ultimate driver, the ultimate determinant of whether prices will continue to go lower or if prices will be pushed upwards. And I say policy consistency because indeed it is true that, the president's initiative to allow Dangote access feedstock, with the Naira deal has certainly had a tremendous positive impact in terms of pricing because it's reduced the pressure on foreign exchange. And that perhaps would have had a marginal impact in terms, of the pricing. So what then needs to happen going forward is that this policy is sustained, and not just as a stopgap measure, but something that is sustained over a sensible period of time so that then the impact, can then be permanent to the extent that, it would ensure lower pressure on the foreign exchange, which obviously would lead to lower prices. But even more importantly, is that, we have seen that the Naira has, struggled to gain a bit against the dollar. If that momentum is sustained over the next couple of months, if you looked at the budgets, the president is eyeing an exchange rate of about 1,500 Naira to a dollar. If that trajectory is maintained, and if for some reason we can even push the strength of the Naira to go to a bit between 1,300 Naira to 1,400, obviously you're likely to see a reduction in the pump prices, of petrol. So as long as there's policy consistency that strengthens the macroeconomic fundamentals within the economy, you're likely to see, lower oil prices. But if you continue to have these policy somersaults, all these topsy-turvy initiatives that you do something on Monday and you change on Friday, you're not likely to maintain this momentum, and you're just going to keep having price fluctuations. And so, while it is commendable, I have consistently commended the president for pursuing that Naira initiative. I think it has to be sustained because it's clear that it's having a positive impact on the market. And obviously, like you rightfully mentioned, competition is healthy. Is good for everyone. And if you asked me, the best thing that has happened in 2024 is what the Dangote refinery has done. It's not just brought competition to the downstream petroleum sector. What it's done, obviously, is to also force the federal government or the NNPC to sit up and stop the opacity and the opaqueness in the way it's run its affairs, for so many years. If you listen to the president's broadcast yesterday when he talked about the fact that for 3 months, he did not need to rely on revenue for the NNPC to meet his obligations. Of course, what the president did not say out loudly is the fact that by virtue of subsection 54 of the PIA, the NNPC that manages the joint venture assets of the president, of the federation, is supposed to pay dividends to the Nigerian government without the president necessarily asking for. So what the president did not say out loud, which has been the case severally this year, was that certain dividends had not been paid to the federation account, right? And so, the best thing that has happened this year is that this Dangote refinery has forced adjustments in the NNPC. You can see that, even though it appears that we're not clear about how many barrel is produced at the Port Harcourt refinery, we're not clear about a lot of things. At least they are forcing them to get their acts together to put that refinery to work. And that's a big win for the consumer, if you asked me.
Yeah, so I'm just curious. Now, Dangote has attributed the reduction in his price to, the swap, the crude for Naira swap. Do we know, or is it just a competition factor that's driving the NNPC, because they also reduced their ex-depot price, which has fed into the 935 by Ipman and Ola? Do we know a major driver of the reduction from the NNPC? So we don't wake up tomorrow and hear, subsidy is back. That's why there was a reduction in prices.
You've asked a very brilliant question. And if you asked me, I can't tell you. And I can't tell you because of how, they have managed their affairs, over the years. We cannot ascertain what is driving their prices, because clearly we do not even know what the NNPC is pricing is what is coming out of the blending plant in Port Harcourt, or if it's from imported petrol. We're not even sure of what the determiner of this pricing is. So it's hard to speak, to what the fundamentals are that has led to the decision that they have made. But what I can speak to, that they are being compelled to make these decisions because of what the Dangote refinery is doing, on their own end. And that's why I said it's been a big win, for the consumers, because, what had happened before now was that the NNPC held complete sway. And to be honest, the fears that many people had that the entrance of a private player in the petroleum sector would hurt the consumer. What we have seen is that in the first instance, Dangote had reduced prices of gas. I think earlier in the year, he crushed the prices of diesel. And we've seen that happen again in petrol. So In many regards, it looks like competition is making the consumer win. But I mean, again, to your question, I really cannot speak to what the fundamentals are. With the NM, it's always one sandwich short of a picnic. You really can't really to
All right, Mr. Dio. I think the other thing would be yesterday we spoke to, I think, two farmers in our morning and our lunchtime show. And the expectation of the impact of this reduction, it seems very slim. They believe the reduction is just too slim to be felt, or it might take a really long time. Can we expect, or what impact, spillover effect can we expect from this reduction in the price of PMS?
Well, I mean, I think that one of the spillover effects is that most of our, food products, at least intrastate, are transported petrol engines. I mean, the heavy-duty trucks move on diesel, which move interstate, but the interest rates, they are largely driven by petrols. And I might add that many other people move yams and rice also with buses that run on petrol engines. So I think that over the next quarter, if this price is sustained, you're likely to see a marginal decrease in the prices of food, across the country, and the prices of
Okay, does seem like we have lost Mr. Adio Ayodele, the managing director of ASCOM and also strategic communications consultant. We're just talking about what to expect now that we've seen reduction in the price of PMS, both from Dangote refinery and from the filling stations feeding from the NNPCL, the Port Harcourt refinery, managed obviously by the NNPCL. And of course, here talking about the issue of consistency or sustenance of this reduction. He has said, well, if the policy, because Dangote has connected his reduction to the crude for Naira swap, then if that is sustained, then Nigerians can expect him to continue at this price, or hopefully maybe even lower than that. Let's take a break now. When we come back, the NGS is on fire. It's already closed. It's a shortened day today. The market closed, I think, about an hour ago or so. So we're going to have closing numbers today and not intraday numbers. I promise you they're exciting. You would want to see. But I think I've been told that Mr. Dio is back. Mr. Dio, can you hear me? Mr. Dio, can you hear me?
Yes, I can hear you loud and clearly.
Great. So
I can hear you loud and clearly.
Yeah, okay, great. So you were telling us about the expected spillover effect, because some farmers have told us that the reduction is too minute to make any impact in food prices, at least for now.
Oh, yes. So I was just trying to say, very quickly that, yes, the low prices have to be sustained for at least a quarter for it to have a marginal impact in terms of food prices. Because for it to impact food prices, it first needs to impact on the cost of transportation. So once the cost of transportation comes down significantly over the next quarter, it will then have a positive impact on food prices. But like I said, the magic is that it has to be sustained over the next quarter for it to have a marginal impact in the reduction of not just transportation prices, but the concomitant impact on food reduction, the prices on reduction of food prices, across the country. Like I stressed earlier, we need policy consistency that is targeted at ensuring two critical things. One is that the Dangote refinery continues to get adequate feedstock that it
All right, unfortunately, we lost Mr. Adio there, but I mean, he just emphasized on consistency of the policy, and supply to the Dangote and I believe also to the Port Harcourt refinery. And other refineries we've been promised. We look forward to an exciting 2025, don't you? I mean, getting more refineries on board, and then we have to totally stop the importation of refined products and instead export. Dangote has started that. That would mean a whole lot to the Naira and to our purchasing power. Look forward to those days. But that's it with Mr. Adio Ayodele, the Managing Director of ASCOM, and also a strategic communications consultant, speaking about the expectations from that. Let's take a break now. I was saying before he rejoined us, it's an exciting day at the stock markets here in Nigeria today. We'll head there after the break. Just stay with us. Yeah, so it's market time now, and the NGX, the Nigeria Stock Exchange, is closed at this time. A shortened day to allow traders go home and prepare for proper Christmas. But it's a wonderful close today. Honestly, 0.81%, heading to 1%. And yes, we have hit the 102. Yes, we've been here before. But it took us a while to recover this 102,174.13. Ahead banking, the banking counter is on fire. You have some of the fugas really traded, really hot, and they drove this for the Nigeria Stock Exchange. So, I mean, a lot of investors do not have the time or the opportunity to take profit. I'm sure that's what they will do when they come back on Friday. But it's good to have the green numbers to close for the holiday. For Johannesburg, it's also in the green, 0.46% for the ocean, 85,105.75. But before we go ahead, let's stay in Nigeria. But let's look at the fixed income. I know we are very much excited about it, but the fixed income market has seemed kind of quiet. But I think there's an auction on Friday, the last one for the year. So before we close, let's speak to Caleb Alimi and take some steps back into the year and see. It's been a busy week. We know that the federal government sought to raise part at least of the over 9 trillion naira budget deficit from the fixed income market. We saw the Eurobond, the return to the Eurobond 2 years after. We also saw the diaspora, the first one, the diaspora dollar bond that was very successful, about 100% oversubscribed. So the fixed income space has also been very busy this year. But let's get the thoughts of Caleb Alimi. Caleb Alimi is the chief dealer at Providence Bank. Hi, Caleb. Good afternoon.
Hi, good afternoon. Compliments of the season.
Wish you same, Caleb. So how would you describe this year? It's the fixed income market. It's been busy and some new things. Return to the Eurobond markets, the diaspora bond also, which that was the first.
Yes, I mean, it was a year of firsts, if we could call it that, especially for the local dollar bond, where the government raised over $900 million. It was oversubscribed. However, they closed it at $900 million at 9.75% for the 5-year paper. That was a really, really, interesting highlight for the year. But if we look back at the entire year, I think it has been, you mentioned something about the deficit. I think in addition to the deficit that was cut off at the beginning of the year, there were a few curveballs, if we could call them that. Number one being the fact that there was a revenue shortfall. And to some extent, subsidies were also still being paid at some point, and all of that had to be funded from the fixed income market. If we look at the numbers generally, as of today, the total that had been raised from the fixed income market, the debt market this year is just a little under 20 trillion naira. I believe that by tomorrow's issuance, by the last auction that we have for the year, would actually cross the 20 trillion naira mark. From the bonds market alone, they've raised over 6 trillion, at different times during the year. I think one of the things that we could also look at as highlights for the year are the new levels of interest rates for yields. You would also recall that throughout the year, we've seen the monetary policy rates, the MPR benchmark rates, move from 18.75 to about 27.5%. And the market had to respond to all of that all of that movement. We remember at the beginning of the year, Nigerian Treasury bills were being issued at a rate of about 16.5%. But then at some point in the year, we saw a 23.5%, which was a yield of about 30%, which is the highest we've ever seen in this market. That's another highlight that we've seen. Also for the bond market, the debt management office realized that they couldn't issue very long-term bonds like they would love to. Typically, they would like to issue bonds around the 15-year, 20-year, 30-year papers. But given where interest rates are, they could not issue anything in that range. So the longest bond we had this year was initially the 15-year bond, and then later they reduced it to the 10-year paper. And we saw those ones print at a maximum rate of around 22% as well. So that's 22% annual cost for the government for the next 10 years. These are record levels. Those are some of the highlights that we've seen across the year. Also, they retapped the Eurobonds market as well. That happened just earlier this month, where they raised a total of $2.2 billion at a maximum rate of 10.375. They raised a 2031 paper, which is about 6.5 years from now, at 9.625%, $700 million there. And then 2034, which is about 10 years from now, 10.375, $1.5 billion. So total dollar-denominated debt for this year is about $3.1 billion, and total NGN debt so far is about 19.9 trillion. Let's just call it a little above 20 trillion. Part of the things that happened in the year is also, like I said, we saw record levels, and so investors cannot be too upset or angry at the government, so to say, or at the issuing house, which is the debt management office on behalf of the federal government, because for the first time as well, we've seen the real return on investment for Nigerians really, really, really narrow. Formerly used to be as wide as minus 10%, but we've come to a situation where it's just around minus 3%. And in some cases, about sometime around November, it was just about minus 2%, the real return. So we've seen that close, that spread, closed during the year. I think so far so good. It's been a hectic one, but we're glad we're coming to the end of it, and we're looking forward to 2025.
Yes, thank you so much, Alimi, for giving us those numbers and all of that. It really sends the message home. So would you say that this year was a good one for the investors, but not so good for the federal government, who had to, work with the yields just to meet up with the interest rates and make the securities attractive?
Yeah, like I said, I mentioned it, that it was a good one for the investors in the sense that, like I mentioned before, the real return, greatly improved. Real return used to be negative 10% or even more before. But now you have a real return to negative, 2% or thereabouts. So yes, it's heavy cost for the government and probably for our children, but the investors are smiling, so to say.
How would you rate foreign participation in all of this? I know at one point we did see a lot of foreign participation, especially in the Treasury short-term securities
space. Yes, so we did see a lot of that, but the CBN, Central Bank of Nigeria, had to more or less incentivize the foreign portfolio investors to come into the space to support the currency. Once there was demand for the naira, that meant the naira was going to appreciate. So we did see a lot of that, especially in the open market operations, the OMO bills. And when OMO bills were a little short, we did see them come into the NTB space. It will interest you to know that the central bank issued over 14 trillion in open market operations this year, and at a maximum rate of around 24.3%, which was around a yield of 33%. So yes, the foreign portfolio investors also came and had a bite of the cherry.
So what should we expect? What can we expect in this final auction that's coming up?
Well, it's the last for the year. They have a total of around 260 billion on offer. Many of the investors are probably just resting now. What would happen is we'll have investors that have their maturities that will just want to reinvest some of those maturities. We think the rates are going to close about the same place it closed at the last auction. The last auction closed for the one-year paper around 22.8%. We think it will close between 22.50 and 23% as well for this last auction. So it will be another good one for the investor. And we also expect that that the debt management office will sell more than the amount on offer. So we could see, like I said, total issuance or total issuance locally crossing 20 trillion.
So as we come to the end of the year, do you see the era of high yields over, or can we expect more. After all, the deficit for 2025 budget is about 13.1 trillion naira. We don't know if it will even increase more than that.
Yeah, I like how you've put it. So it starts at 13.1 trillion. However, if there's a revenue shortfall, that would also have to be funded, and so we could see, more supply. I think we would see high elevated interest rates, probably for H1 for the first half of the year, and then as we go into the second half of the year, I think they may begin to prioritize economic growth and all of that, and we'll begin to see the rates moderate. But the first half of the year, at least the first 2 quarters, I think interest rates are going to be elevated. Given the size of the issuance that has happened across the year, they will not allow that liquidity back into the system just like that. So I think the central bank is still going to adopt a contractionary body language all through next year.
But as we pursue this 15% inflation target, that could mean a reverse for investors.
The inflation target is largely a 10-year average. What you and I and investors will focus on is year on year. So 10-year average is the target 15%. Nobody expects inflation to get to 15% year on year. We'll probably see high 20s next year. And then also next year, there's something economists and statisticians call base effect. All of that will kick in, sometime about the second quarter of the year. So inflation may be growing, but at a much slower pace. And so we'll see that moderation. And that, due to that base effect, it will look like there's been a drastic drop in inflation. And so eventually interest rates will begin to moderate.
Yeah, well, but I mean, at least for the first half, from what you see, the fixed income market is still the place to go to for investors.
Yeah, for risk-averse investors, the fixed income market is always a good place to play. And yes, it will still bode well for investors, at least for the first half of the year.
All right, Chief Dealer, Providence Bank, Caleb Alimi, thank you so much for your perspective and especially those numbers. Wish you a very glorious Merry Christmas tomorrow.
Thank you, Ini. Bye-bye.
Bye. Okay, so let's head to the other markets, yes, before we move on to the rest of the world. We see Egypt is in the red, 0.63%, 29,928.36. And for Kenya, this is the close from yesterday, Monday, 1.59%, and building on that 100 level, 120, I should say now. Now, that's for Kenya, the expected equities are expected to remain steady around the 1,900 point mark, with the NSE 20 share index closing flat. The decline in the 91-day Treasury bill below 10% also affected that for the first time since 2023. The shilling we saw this afternoon is stable against the dollar, so that brings a kind of a stability and certainty around that. There was also an increase in their diaspora remittances, so we saw some stability around the Kenyan markets. I think it went up, supported by 19.2, and went up to, that's remittances, 423.2 million for the month of November. Now, looking at other markets or other continents right now, we'll go to the Middle East. We see a green for Dubai and Abu Dhabi, 0.34%, that's 5,073.77. For Abu Dhabi is 0.24%, 9,425.05. Other parts of the market in the Middle East, if we could have those numbers from the Middle East, if we could have the other numbers from the Middle East. Thank you so much. Tadawul and Qatar are on the flip side this afternoon, 11,920 after losing 0.23%, and Qatar 0.28% at 10,508.35. We'll go to the United States, yes, the world leader. And we see 43,344 for the Dow Jones, gaining 0.06%. S&P 0.13% at 6,044. On NASDAQ, the heavy tech counter there, 0.17% in the green, 21,789. We see that the market has recovered from the shock of that announcement from the Federal Reserve, and so we see a bit of stability right there in the market, even as we prepare for the holidays. Now let's head to Asia. Well, unfortunately, we're greeted with more of red colors. Nikkei in Japan, 0.32% in the red, 39,036.85. The Kospi, Korea, 0.61%, 2,440.5 to the Hang Seng Index. Takes it away from there, more than 1% in the green, 20,098.29. Other parts of the Asian market is Shanghai and India Nifty. And we see India moving the oil market this afternoon, but their stock market, the Nifty 50 is in the red, 23,725.85 after losing 0.12%. The Shanghai Composite, very comfortable at 1.26% in the green. Let's move to Berlin, where the 27-country bloc, as the European Union, has trade agreements around the world. But there's one country that just signed on with it this past weekend, and that's Switzerland. Of all countries, it lies at the heart of Europe, but is not a member of the EU. Lars Holter has background details and more. Hi, Lars. Good afternoon.
Having me. Well, I got to tell you that I too was surprised that there hadn't been a trade agreement between Switzerland and the EU so far. Switzerland has 4 neighboring countries, that's Germany, France, Austria and Italy, that are all EU members. And then there's a 5th neighbor, tiny Liechtenstein, that is at least part of the single market, the European Economic Area. In fact, a person in Zurich has to travel over 600 kilometers to even get to the next non-EU country, which would be Bosnia-Herzegovina or Britain, depending on what direction you want to take. It is obvious, given the geographic location of Switzerland, that almost all of its trade is with the EU. And for decades, bilateral agreements had been regulating that trade. They had all been focusing on separate business sectors. And since they are now running out, many in Switzerland were in fact anxious to get an all-encompassing trade agreement in place so as to secure the trade partnership for the future.
So what is the trade between Switzerland and the EU?
Interesting question. Indeed, there's a lot more to Switzerland than watches and chocolate, even though these 2 items are obviously also part of the trade between the country and its partners. Among the most important trade sectors for Switzerland is chemicals and pharmaceuticals. Their total trade goes around 65 billion euros with the European Union. That's almost half of the EU's entire trade in that sector. And then there's machinery and appliances, optical and photographic instruments, as well as precious metals. Now, Switzerland is also a very important partner of the EU for trade in services, in particular, of course, for commercial services, and that includes banking that adds over 225 billion euros to the total. So we're talking about a really important partnership.
Yeah, so what are the high points of this trade agreement now?
Well, first of all, it regulates the literal trade of goods, the import and export without tariffs, the transfer through air and land, but it also officially allows Switzerland to trade electricity and energy with Europe, which, for example, is especially important for Germany, particular southern Germany, where we're sharing a border and where many companies will be happy to import electricity and hopefully see prices drop. One item was a bit of a stumbling block. Switzerland is a country that has always had a very tight lock on immigration, and the EU, of course, allows its citizens to freely move within the bloc, to live and work wherever they want. Now, that is something the Swiss didn't want to see for their country, so Switzerland insists on its ability to slow down or stop the influx of people moving there. That was especially important as many had feared that otherwise the deal wouldn't even get agreed to in the first place. By the way, the deal is not yet fully through. There will be a referendum sometime in the new year that can still technically block this agreement from becoming the law. But it seems unlikely, given the warnings economists have been given. They fear that Switzerland would stand to suffer without well-regulated trade with the European Union.
Yeah, it looks like there's a story waiting for us, Lars. Thank you.
Thank you.
All right, let's come back to the continent, the African continent, to start from South Africa, where the Minister of Electricity has announced that the country has experienced 272 days of uninterrupted power supply. Best performance in 5 years. Well, he highlighted that this achievement is a result of building a solid foundation to sustain power performance, although he cautioned that South Africa is not yet out of the woods. Well, he also says that the utility ESCOM, alongside Power Utility ESCOM, earlier they hosted the final Energy Action Plan media briefing of the year, where they reflected on the key accomplishments and challenges faced over the past 12 months. Load shedding has had a significant and detrimental impact on South Africa's economy over the past decade.
Well, we think catching distance of the resolution of load shedding, but we are not necessarily out of the woods yet. I think it's important that I underline that point so that there's a common appreciation across the country that even though we're seeing the kind of phenomenal performance that we're seeing, it is important that we continue to fix our eyes on the bouncing ball, and that bouncing ball is to ensure that we end load shedding. And then in the long term, to ensure that we are able to provide the sufficient aid space for the South African economy to grow. So I'm going to take the opportunity just first to do a recap of, if you like, the journey that we have traveled and also the kind of performance that we are seeing, one. And two, share with you what are the immediate outlook of generation performance going into the future.
I guess Nigerians will be saying, just give us 100 days of consistent power. In fact, 50 days consistent power supply, and we will celebrate more than that. Well, the days will come, hopefully. Now, let's move to Ethiopia. When an unusual scenario has happened, some World Bank staff have criticized an assessment of Ethiopia's finances conducted by the International Monetary Fund, questioning whether the analysis that underpins the country's debt restructuring may be faulty. IMF and World Bank, very unusual. Well, in an internal pass seen by some reporters, World Bank consultant Brian Pinto and its chief economist Amit Gill assessed the debt sustainability analysis dated July and prepared by the IMF and staff of the International Development Association, the World Bank's Fund for Poorest Nations. The authors suggest that based on the DSA, Ethiopia is facing a short-term liquidity crunch and not a long-term solvency issue, a point of contention between the government and the holders of the $1 billion international bond that's in default. Asked by the paper, a World Bank spokesperson says that they generally do not comment on internal deliberations between the World Bank and the IMF or any of their partner institutions. An unusual scenario, indeed, we're seeing right there in Ethiopia. In Kenya, the government has banned wheat imports to safeguard local farmers from the influx of cheap foreign produce that disrupts market prices. Agriculture Principal Secretary Paul Rono announced the decision in Eldoret, stating that millers will only be allowed to import wheat after fully utilizing local produce at competitive rates and ensuring farmers are promptly paid. The government aims to encourage increased wheat production and shield farmers from exploitation. Kenya produces approximately 2.2 million metric tons of wheat annually, which accounts for only 5% of local demand. The deficit is met through import. To support farmers, the Agriculture and Food Authority has revised the minimum purchase price for top-grade wheat, raising it by 100 shillings. Millers must now pay 5,300 shillings for a 90-kilogram bag of grade 1 wheat and 5,200 for grade 2, while the price of grade 3 wheat remains negotiable. However, farmers have expressed dissatisfaction, noting that millers were offering 4,800 shillings during the harvest period, which they deemed insufficient to offset rising production costs. And the manufacturing and mining sectors in Zimbabwe have exhibited resilience against challenges that characterized the economy in the third quarter of 2024, as measured by the volume of manufacturing index. According to the VMI reports prepared by the Zimbabwe National Statistics Agency, production indices rose in certain areas. Capacity utilization and confidence indices painted a less optimistic picture. Capacity utilization in the manufacturing sector fell to 47.1% in the third quarter of 2024 from 48.4% in the previous quarter, as the sector battled various challenges like power cuts and constrained access to funding. Large manufacturing companies recorded a utilization rate of 57.5%, down from 60.8%, while small and medium enterprises were at 45.4%. The decline reflects challenges faced by companies in efforts to increase production, which includes acute power shortage. Mining sector capacity utilization dropped to 52.7% from 57.5%. Capacity utilization is a critical measure of operational efficiency and indicates how much of a sector's production potential is being utilized. Now, the Council of Ministers has approved over $28 million for the operation of new air traffic management system for South Sudan. The President, Salva Kiir, earlier in the year stated that South Sudan was close to taking full control of its airspace from neighboring Sudan to maintain the nation's sovereignty. In a statement, the Minister of Information, Michael Makui, said that a proposal presented by the Minister of Transport, Maduba Yel, outlines plans to improve the nation's airspace control by constructing 3 radar stations in key locations, Juba, Malakal, and Wau. The project involves constructing a new air traffic control tower, a surveillance and communication system, and supporting civil engineering facilities. Now let's head to the crypto space and see how they are preparing for Christmas. I wonder if it's still in the red or Laddie has a touch of red. Laddie, right. Oh yeah, you do have a touch of red.
Yeah.
I don't have a touch. I have a drop.
Red. You're right.
A drop of red.
Yeah, a drop of red.
You have a touch of red.
It's quite interesting, the NGX giving gifts.
Oh man,
at this point, Nigeria's equities market.
Yes, and that was so unexpected, Laddie.
Yeah,
I celebrate the NGX.
Gifts,
no, but it gave you your gifts earlier, so I mean, you can always get gifts
every time.
You get yours earlier.
This market trades 24 hours, trades on holidays. No closing time, for this market.
But Santa is on the floor of the NGX now.
On the floor of the NGX, having all the fun.
Yes.
Quite interesting. All right, you see Ethereum 1.53%, up $685 for BNB. So we're seeing altcoins looking quite good today. They seem to be the ones giving gifts at this point. Bitcoin might be taking a pause at this point. All right, let's look at the price of Bitcoin, Ethereum. 2023, that's for last Christmas Eve. So Bitcoin was trading at $43,728. So if you compare that to the all-time high of about $106,000, $107,000. So this is up about over 100% from last time. Then we see Ethereum, $2,309. That was last Christmas Eve in 2023. So we've seen a lot of changes with most of these prices, with Bitcoin hitting an all-time high, Ethereum also hitting a new high of $4,000. So let's look at the prices today. That's Bitcoin 1.93% down, BNB 2.03% up. We're seeing the altcoins that are looking quite good. XRP, that was trading at 50 cents for the longest time, but still managed to continue the run, 0.57% up. Cardano on the flip side, that's down 0.82% this Christmas Eve. All right, let's look at the headlines in the market. Now we see there's a token swap there going on for Phantom. They're upgrading to Sonic token. So it's a transition at this time to the S token. The FTM tokens will be converted to Sonic on a one-to-one basis. So if you hold Phantom, you need to watch out for that swap to the new coin there, which is S That's Sonic token. Then we have Binance. They're listing 11 pairs of cryptocurrency trading pairs. That's for Binance. That's the world's biggest cryptocurrency exchange. Normally they do this, to delist pairs that are not really getting attention. So 11 spot trading pairs are going to be delisted. It's a regular review process they normally do. That will take effect from December 27, 2024. Affected pairs include ACE BTC trading pair, ACM Tribe, BOEM BTC, and a couple of other trading pairs. Then we also see in the market there, so much playing out there, with the delisting, and traders also wondering what's going to happen next. Is Bitcoin going to give one final hurrah? We'll find out. Then right here in Nigeria, the Securities and Exchange Commission, they're saying that a lot of crypto firms in Nigeria might not get the approval to operate as a cryptocurrency platform. That's according to Dr. Momotimi Agama. He hinted that some companies that have applied to be registered by the commission may not meet the requirements to get its approval. So that's it there. But a couple of companies have gotten approval so far, about 2 of them. But let's bring in Solomon Amunde now, financial market analyst. Hello, Solomon.
Good afternoon, Ladi.
Good afternoon, Solomon. Compliments of the season. I'm sure you're basking in a lot of profit right now, seeing where Bitcoin is today from 2023 Christmas Eve, about $40,000. So let's talk about this phantom swap to Sonic token. How's it going to affect the platform going forward? And is this switch, will it be seamless for investors?
Yeah, definitely. So far, they've done a fantastic job to make sure the switch and upgrade is actually quite seamless and at the same time very interesting. So the community is very hyped and they are very expectant to see what the Sonic network would bring forth. But from the testnet, we can see that the Sonic network is actually very fast and they are doing a lot to make sure they reward the community. And also one of the reasons for the upgrade is so that they can reward active builders of the network, which is a positive move in crypto today. Builders love to be rewarded on the go. So I think it's quite positive and it's a good move.
And talking about rewards, we're seeing Pengu, they have done an airdrop to most of the crypto OGs, valued about $100 to thousands of dollars. We also see Magic Eden also airdropping to some users, and this is happening when I think some players on the Telegram space are getting tired of waiting for some of these airdrops.
Yeah, so exactly. What the catch there is, Telegram airdrop has never been so successful. It hasn't. It was only a matter of time. But yeah, we have a few good ones. But Panju did a fantastic job rewarding OGs that have been active in the crypto space since 2021 till date. And Magic Eden too, they also did a fantastic job. So both airdrops, especially Panju, which was very, very well distributed, they actually did reward people some good numbers. I mean, some persons got as much as $20,000 from Panju, and similarly too from Magic Eden. So they were quite very good airdrops.
Right, and do you see this continuing going forward? Do you think more airdrops will come up?
Yeah. So actually, I believe we're in like an airdrop super cycle. Within the last 3 months, we've seen insane amount of airdrops. And let's not forget the biggest airdrop in the history of crypto, the hyperliquid airdrop that saw people getting as much as $3 million airdropped to them. Yeah, and the least persons getting as low as $2,000, $3,000 airdropped to them. So I would say we're in an airdrop super cycle.
All right.
So many platforms to airdrop this fall.
All right, we'll keep tracking to see how they perform. Thank you so much, Solomon Amunde.
All right, thank you very much, Larry.
Yeah, and compliments of the season. So, Ini, it's that time again, and I know you're going to cook a lot. You're going to cook a storm tomorrow, so expect me same time tomorrow.
Okay, I'll try. All right, so that's it. Well, as Ladi noted, we're already cooking, especially the women are so busy now. But don't get so busy that you do not enjoy the Christmas yourself. Women just have a way of taking care of the family and sometimes forgetting themselves. Let's take care of us. You know, it's very important. But I'll see you tomorrow. It will be a Christmas edition and Business Incorporated and Business Morning tomorrow. I'm going to be here live. Let's do Christmas together. I'm Ini John Mekwa.